Alrighty, guys, so we have another big week coming up in the stock market this week. What else is new, right? In this video, we're going to be breaking down my game plan for the week, stocks I'm looking at, earnings reports coming up, which I think we have about 5-6 companies reporting earnings this week, at least that I'm looking at. So sit back, relax, let's not waste any time. Hit that like button, subscribe, take a sip of your coffee, and let's dive into the video. So listen, guys, the markets have been very choppy lately. Oh, there we go. We don't even have ThinkOrSwim. This is not a good way to start the video. Where's ThinkOrSwim? There it is. Now we can get into the video, guys. You guys know the markets have been choppy, and you can see clearly here on SPY. We'll talk about TQQQ as well in a couple of minutes. We've been moving up and down between, especially the past roughly week of trading, between 390 to 395 mostly, and we did get that. One instance where we ran up over 400. We held that for pretty much just a day or two, and then we ended up falling back under 400 a share. So look, Friday we had a green day. Friday was a nice green day for the markets. Well, I guess the NASDAQ broke even, but other than that, SPY went up 0.5%, Russell up 0.5%, actually more like 0.6. Same with the Dow and the VIX on Friday. I'm not sure if you guys caught this, but it went down over 3% on the day. And like I said, SPY's been, pretty much in limbo here, holding between 390, 400 a share. And TQQQ has been right around, 282, 285 to about 288, 290 a share roughly. So both of these have been in a little $10 window. So for this upcoming week, we have the Fed minutes on Wednesday. That's at 2 p.m. We'll talk about that here in a second. We have a bunch of these earnings coming up. We have to see and wait for direction, right? Direction is very important here on SPY and TQQQ, especially if we're looking here on this 20-day chart, because again, we have clear resistance here at 395, 400. Are we going to break out of there and continue the uptrend that we've been on, which, mind you guys, we have been on an uptrend, even though the past roughly week of trading has been choppy, right? We're still holding higher lows. We're still above these moving averages on the hourly chart on SPY. And going back to TQQQ, same thing on TQQQ, right? Well, I guess this is slightly under the 50 moving average, but you get the point, right? We're still holding the uptrend clear as day. So I'd argue bulls in the short term are still in charge. I'd make that argument all day. And now we just have to see, are we going to get the next leg up? Is TQQQ going to break 288, fill the gap to 295, maybe break 295 and start pushing over 300? Is SPY going to break out of, let's see here, 398, 400 back to 405, maybe now, pushing up to those highs from the middle of September being, I think, 415? Yeah, 415, 420. That's when we got the inflation number for September. It was for August, but we got it in September. And you guys remember that day, the markets got destroyed. Inflation came in hotter than expected for the month of August, right? And that completely shocked the market. SPY went down about 5% on the day. The NASDAQ went down a bunch. So let's see if we start getting out of 400 this week. It might not happen. Who knows? We can't predict the future, obviously, but we are going to be reporting whatever happens here on the channel. So if you haven't yet subscribed to the channel, guys, hit that subscribe button. Let's try and get, what's the next milestone? 30,000 subscribers? Yeah, let's try and get 30,000 subscribers. So right. Yeah, let's do that. So at this point, again, bulls are in charge, in my opinion. Now we just have to wait for the next leg up. And like I said, Fed minutes are this Wednesday at 2 p.m. And essentially what the Fed minutes are, if you guys didn't know, they're a detailed record of the FOMC's most recent meeting, which I'm losing track of time. Was that about a week, 10 days ago? It was very recently. You guys remember that. It provides in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates, which you guys know we've had 3, 4, 75 basis point rate hikes in the past couple of meetings. I'm losing track of how many we've had. I think it's been 3 or 4. It's definitely been 3. Has it been 4? Again, losing track. And next meeting, we're expecting in December to have a 50 basis point hike. And then in 2023, I think a couple 25 basis points. We'll see. You guys have seen the dot plots and, where they see rates going. And that's, these charts they put together. Of course, that stuff's not set in stone. It's subject to change. They could always increase rates even more, which in that case would actually shock the markets, because the markets, I feel like, are not pricing in higher rates. Let's say, well, first of all, the market's pricing in a 50 basis point hike in December, right? If that comes in, let's say at 75 basis points, that could cause more selling. I think the markets are pricing in, a couple quarter 25 basis point hikes in early 23. If those come in more, 50 basis points, let's say, that could shock the markets. It all comes down to inflation, which we've seen in the past, number here that we got. Inflation actually came down a little bit, which really caused, stirred this rally, or continued the rally that we're seeing right now. So, yeah, what do you guys think? Fed minutes is going to be big. Again, that's on Wednesday at 2 p.m. Watch out for that. So, yeah, let me know your thoughts in the comments down below. As always, I'd love to know where your guys' heads at, what you're thinking. And if you haven't gotten your free stocks from Moomoo yet and from Webull, use those links down below. Deposit at least $100 with Moomoo, and you get $10, a $10 cash coupon, plus up to 15 stocks, each up to $2,000. It's free money, guys, and full disclosure, it helps out the channel as well. I appreciate you guys as always. And you could also get 12 stocks from Webull with any amount deposited, and all of those could be valued up to $32,000, some crazy amount like that. So if you want free stocks and you want to help out the channel, links down below. I appreciate you guys as always. And with that being said, let's dive into these earnings. Again, we have some earnings coming up this week, although it might not be the most eventful week, quite frankly, in terms of earnings. It's not. We had a bunch of earnings the past couple of weeks that were way more, interesting, or maybe not interesting, but way more fun to look at. This week we do have some decent companies, but it's not like we've seen recently, but we're still going to be covering them. We have Best Buy this week. We have Dick's Sporting Goods. We have Zoom, which you guys know Zoom, that went bonkers during the pandemic. Now it's come down to under $100 a share, which is insane. So let's start talking about this, guys. We have Best Buy this week. And mind you, they last week had a nice close to the end of the week on Friday. The stock went up 3% on Friday, closed over $72 a share. So they're reporting on, I believe, Monday. No, they're on Tuesday. They're on Tuesday in the morning, pre-market. And they're looking to do EPS of $1.03. That's the estimate. And mind you guys, all these numbers that we're going to talk about today, these are not set in stone, obviously. These are all estimates. The actual numbers, when they come out, could be higher than these numbers that we're talking about, could be lower than these numbers that we're talking about. So keep that in mind. Best Buy is reporting this week. They're looking to do EPS, earnings per share, of $1.03. So they're going to be profitable, which is nice, but it looks like that is coming down from last quarter where they did $1.54. All right. Revenue estimate, $10.31 billion, which would be down if that were to come in at 10.3. Down 13%, which is not good year over year. A lot of companies are down, so it's not too alarming. A lot of traders, investors are probably pricing that in, but that's the reality. Their revenue is most likely going to be very negative unless they see a crazy miracle where they grow year over year, which analysts can't have it that wrong. They cannot have it that wrong. So they're probably going to be down year over year. And you can see here on the chart, even though revenue's down year over year, the earnings might not be the best. The chart still looks pretty good, at least in the short term. We have clear higher lows being made. We're above the moving averages. Again, on Friday, we had a 3% green day. So to me, this looks like an ascending triangle. We sold off, shook a lot of weak hands out. This thing fell about 12% from, in just a day or two, right? 12% from $78 to about $67. So it got hit hard. But buyers came in again Friday. We had a great day. So I feel like BBY could be moving back to the mid-high 70s. We might end up seeing this ascending triangle play out. We break 80. Maybe we start moving 85. Of course, this is not guaranteed. Nothing is guaranteed in the stock market. But, if these earnings pan out nicely, investors digest them, and they like the earnings, this could really start making a move forget past 80. Here into the mid 70s to about the highs from a couple days ago. That's where it's initially going to go. Then we're going to see what it does potentially past $80 a share. So yeah, what do you guys think about Best Buy. I think it looks pretty decent. My alert's at $80. I might as well put another one. Why don't I have two here? Let me set another alert. I'll put another one here. Mark is at or above $73, and we'll see what it ends up doing from that point. So that's Best Buy. Let me make sure I'm still filming. Yeah, we're still recording. We're good, guys. Hit that like button if you haven't done so already. Let's try and get at least 100 likes on this video. Can we do it? Hit that like button. And now, next stock is Dick's Sporting Goods, ticker symbol DKS. Let's pull that up. I actually haven't looked at this stock in a while. So look at that. Okay, Dick's Sporting Goods is on the 22nd, same day as Best Buy in the morning, and they're looking to do EPS of $1, or rather $2.19 on revenue of $2.68 billion, which would be down 2.4% year over year. So not the best, kind of like Best Buy. I mean, their loss expected for, or not loss, but their decline in revenue is expected to be less than Best Buy, but still, it's in the red. I mean, they're going to be not losing money, but declining revenue year over year. So Dick's Sporting Goods on Friday actually had a massive day, 6.5%. And you could argue that, okay, the uptrend's still holding. You could easily make that argument here, which it is. I mean, look, we have higher lows being made. We have seen those for the past couple months. I mean, clear as day. You guys see that, right? So, and then on Friday, we had a big pop. Buyers came in, which solidified that higher low. I mean, that was a great move for the Bulls on Friday. Now, let's see if the move's legit. I mean, because at this point, we're still technically on the 20-day chart in a downtrend at the same time as we're making higher lows. By that, I mean we're making lower highs, right? You can see here lower high, lower high, lower high, lower high, lower high. So if we start getting out of, let's say, 112 on Dick's Sporting Goods, this thing's probably going back to 120 plus. I mean, that's my take here, honestly. And that doesn't require too big of a move. I mean, we're already at 110. All it needs is, a good earnings report on Tuesday. This thing's going to fly. I mean, I'm not banking on that. I'm not gambling on it, rather, because I don't gamble on earnings. I used to do that earlier in my trading investing career. It didn't work out well for me. Let's just put it that way. So nowadays, I just wait and see what the earnings are. And then if I want to play it, all right, I'll play it. And at that point, 112 breaks, 120 could be next, maybe even higher. If we look here at the all-time high for Dick's Sporting Goods, I don't even know what it is. Oh, wow, look at this chart here. This makes my case even stronger if this plays above 120. Look at this chart on the 3-year, guys. If we do break 120, which clearly that is a big resistance even here on the 3-year chart, what do you guys see here? This is an inverse head and shoulders. If we break 120, that right shoulder is really going to start moving. Mark my words, guys. Probably towards that 140, 145, maybe that all-time high mark being about $147 a share. Dick's Sporting Goods really looks pretty solid here, but it's got to break out of that 120 level. I'm telling you guys, because that is the, it's not the neckline, but that's a big resistance for the right shoulder to complete in this pattern. I mean, you guys see it here, left shoulder. We got the head right there. We got the right shoulder right here. Boom. You guys see that? So there we go. So again, 120, we break out of there. We complete this inverse head and shoulders probably to about 140, 45. That's completely in the cards in my opinion. So let's see what these earnings look like on Tuesday in the morning on Dick's Sporting Goods. Zoom is another one that we have this week, which I don't like this company at all, guys. I got to be honest with you all. And I was calling this out during the pandemic. I mean, this is nothing new. Zoom is a company that got to $600 a share. Unfreaking believable. I mean, that is the mother of all bubbles. Will Zoom ever get back to 600? I highly doubt it. I mean, in my opinion, there's no way it gets back to 600, but who knows? I mean, I could eat those words in a couple years. I mean, which I'd be fine doing. I've been wrong in the past, but for me, guys, I don't see it ever getting back to 600. I mean, it was the clearest bubble, clear as day. I mean, when we were in, COVID lockdown times, everybody was on Zoom. At one point, I mean, life was going to get back to normal, and now we're slowly getting back to normal. Sure, a lot of people are still working remote, but it's changed. I mean, things have shifted kind of back to normal, a new normal, if you will. And that's a new normal where Zoom is not being utilized nearly as much. And for that reason, their growth has been slowing down like crazy. I mean, revenue, the estimate's looking to be about $1.1 billion, which would only be up 5%, not even 4.5% year over year. I mean, that is not good, considering during the pandemic, were they not growing revenues by like 100% or 50% or 80%? Crazy numbers. I don't have them off the top of my head, but that slowed down dramatically, and it could be going negative for all we know here in the next couple of years. I mean, EPS is looking to be about 84 cents, so they're profitable. I mean, how could they not be profitable? I mean, this is a company that it's I mean, I could imagine there's not many costs involved. I haven't really looked too deep into the the financial statements, but yeah, Zoom is a company, at least lately. I mean, I haven't done that in probably a year, 2 years on Zoom. So this is one that I'm not really looking to buy as a long-term position ever. I mean, as a trade, maybe it looks like it is reversing ever so slightly here. We did take the highs out, the highs from the end of October. We took those out here last week. I mean, earlier in late October, we were at 86. Last week, we hit almost 90 a share. So let's see if we could retake that mid 80 mark. I mean, now we're in the low 80s. We're at 81 bucks. Friday, Zoom had a red day. So could this retake that mid 80s mark? That's kind of what I'm looking at. If we take out 85, we're probably going to 88, 89, 90 from that point, maybe even higher. So yeah, Zoom Video Communications is one that I'm not loving as a long-term by any stretch of the imagination, but as a short-term play, this could be one worth watching with earnings coming up, tomorrow morning after the bell. Or not tomorrow morning after the bell. That makes no sense. Tomorrow after the bell, right? So Zoom, you got to watch it, guys. JWN's another one that we talked about a little bit last week because we saw Macy's report, and Macy's crushed it. If you guys didn't catch that, Macy's stock went up, I think 15% on Thursday, something like that. Then on Friday, it cooled off a little bit. Makes sense. Pulled back a little bit. So JWN's reporting. Let me see what day it's on. Wednesday, I believe, if I remember correctly. No, they're on Tuesday after the bell, and they're looking to do 14 cents in earnings per share. Revenue about 3.47 bill, which would be down almost 5% year over year. So they're looking to decline a little bit. Not surprised. I think Macy's did as well. So this is one that, guys, I'm not telling you for sure it's going to happen. I don't know what's going to happen. But, if this thing takes out 22, all I got to say is watch out above, especially if these earnings are good. There could be a lot of upside on JWN. I mean, we've seen this go in either direction massively throughout the different earnings reports, or the last earnings reports that we've seen with this company. Last time they reported, well, it worked in the Bears' favor. It went from $24 to about 16, 17 in the matter of a couple of weeks there. Not even a couple of weeks, a couple of days rather. And you can see now it's at 22 bucks, roughly a little bit under that. If it breaks that 22, I mean, we have a wide open gap. I'm not saying it's going to go all the way to 28, but could it go to the mid 20s, consolidate a little bit, then start going 28? It is possible. We'll see how these earnings look, though. So let's not get too excited about Nordstrom quite yet. We also have Deere & Company this week. Let's pull that up. Ticker symbol DE, also known as John Deere. You guys probably know. You know this company, right? DE's been doing pretty well. They report earnings on the 23rd, which is on Wednesday in the morning. And by them doing pretty well, I mean the chart has been doing well. The stock has been doing well. Look at this, guys. I mean, this thing has been beasting along. Look at this. We just broke out a couple days ago. We saw the ascending triangle play out. We're above these moving averages. And this is actually a stock that has not had, I'd say, one massive or a couple massive green days to get it to where it's at. We've seen some of these stocks recently just have crazy rip your face off type rallies. John Deere is that type of company and that type of stock that's been slowly inching along day after day. Sure, it's had red days, but it's been slowly creeping up. You can see here it's at 415. It was at 280 back in July. I mean, that's insane. The stock's up 50% since July, and it's getting very close. I think all-time highs were hit earlier in this year for John Deere. Let me make sure I'm correct on that. Yeah, I'm correct on that. Back in April. So we're getting awfully close to all-time highs on John Deere, guys. And, this is really one earnings report away from shooting up to that 440, 445 mark. That's the gap we're playing in right now between 400, 415 to about 435, 440. That's where we are. So John Deere's looking to do, or Deere & Company, whatever you want to call it, they're looking to do EPS of $7.12 on revenue of $13.39 billion, up 30% year over year. So they're going to be up about 30%. I mean, this revenue growth out of all the companies we've talked about today, they're the only ones that are growing, other than Zoom, which is up 4.5%. I mean, that's the expected revenue growth, which is not that great. This is really the only one that has very respectable revenue growth year over year. Dare I say incredible revenue growth year over year at up 30%. So John Deere, they're on, did I say Wednesday? Yeah, Wednesday before the market opens. And again, they're playing in this gap. This could probably start moving mid 400s if these earnings are very strong. Now, if they're not, hey, it could go in the other direction. That's always possible as well. So keep that in mind. We also have HPQ this week, which I couldn't pull their numbers. I was using Yahoo Finance to find these numbers, guys. Couldn't get them for this company. But the setup looks decent for this upcoming week as they report earnings on, I think, the 22nd. Yeah, 22nd after the bell. Look at this chart. We'll look at the chart. It's in an uptrend, clearly. We're above the moving averages. We have a golden cross. And at this point on Friday, we had a 0.2% green day. Not bad. But the thing is, even though it wasn't the best green day, we consolidated above the 50 SMA and the bottom of this channel. Do you guys see here? We're still holding the bottom of the channel. Now, we could be playing in this channel this upcoming week, depending on how those earnings are on Tuesday after the bell. Let me make sure again, Tuesday after the bell, right? Yep, Tuesday after the bell. We could be playing in this channel, $29, $30 to about 31, 32, maybe past that, mid 32s, right? So HPQ looks very decent. It's not overbought by any stretch of the imagination. In fact, it's more oversold, I'd argue. So this could be really, in the cards for this week as a play. I'm also looking at Nike, ticker symbol NKE, although they don't report earnings this week. This is one that, if I pull it up and this thing wants to work, come on, this is one that clearly is breaking out above the moving averages, and we consolidated all of last week. That's kind of why I'm looking at it here. We consolidated above the moving averages. Now I'm thinking to myself, okay, are we going to get either a break now towards $115, maybe $120? Are we going to see another leg up, kind of like what we saw on that huge, little run? Well, not huge, little run. That makes no sense. That huge run that we saw here on the on the 10th or the 11th of November. Are we going to see something similar to get us to 115, 120, or is this going to retrace back to $100, 98, and hold there for a little bit before it makes up its mind? We shall see, guys. I'm watching it either way. Nike for this week, and of course, I talk about the stock all the time because the chart looks so damn good in my opinion. It is Netflix, guys. Ticker symbol NFLX. This went down 2.5% on Friday, but we're right around these moving averages. This is going to be a very big point for the bulls. Do buyers come in at about 270, 75, 280, 285, this little $10, $15 window? Do we start getting back to 300, over 300? Or does this collapse down under 270, 265, which obviously would not be good for the bulls? So it's all about, direction, which at this point, bulls are in charge clearly. But now let's see if they get another pop or another push this week, maybe on Monday, Tuesday, and we get that leg up. We'll see, guys. So that's Netflix. And to end off the video, and by the way, if you guys are still here, comment down below, say still here, stuck till the end, drop a money emoji, and make sure to hit that like button. We're trying to get 100 likes on this video. What we're noticing here on the markets, again, is volatility. So for that reason, I'm also going to be watching TQQQ, SQQQ this week, which is an inverse ETF combo that is leveraged, by the way, so keep that in mind. It's very risky, but this trades on the NASDAQ, QQQ, right? So let's say QQQ goes up 3% on the day. You can leverage your returns by buying TQQQ because it's a 3x leveraged ETF, in other words, right? So if QQQ goes up 3%, this is going to be going up 9% roughly. And the flip side would be SQQQ, which if the NASDAQ has a dud day, it gets destroyed down 3%, we could play that, in other words, by buying SQQQ. It goes up 9% if the NASDAQ went down 3%, right? That's how it works. But I'm oversimplifying it here, and it might sound easy, but it's not easy, guys. So keep that in mind. These are very risky. Day trade or swing trade or do whatever type of trading with these at your own risk. I'm just bringing them up because I'm truthfully watching them. And this is my YouTube channel after all, guys. So we're going to be talking about the real stuff here, what I'm actually watching, what I'm actually doing. So with that being said, if you all found value, hit that like button. Make sure to subscribe. And, of course, get your free money from Moomoo, from Webull. All those are linked down below. And feel free to join my Patreon. We're currently revamping the Patreon, changing some things up. So if you want to be a part of the Patreon, use that link down below or go to StockSurfS.com/Patreon. Join it. Make sure to try it out. Let me know your thoughts, and I'll see you in the next video, guys. Peace out.